Let's start with Olaf Carlson-Wee. He is the founder of Polychain Capital and the former head of risk at Coinbase. You know what? I think let's start off with a survey. By show of hands here, including our panelists, who's participated so far in a token sale or is thinking of launching one of their own? Yeah?
Well done.
Okay, so we've got a lot of that here today. Olaf, do you want to start off just by saying maybe your favorite token sale so far or one you hated and why?
Oh, well, it's tough to choose just one. I really like when folks are thinking about more experimental token sale mechanics so that all participants have kind of a better experience in the sale. I think that 0x was that kind of model of the token sale was really interesting and innovative. I know that Jason Touche of TrueBit has created this interactive token offering that hypothetically should more, align incentives very well. So I think those are some of the things I'm thinking about.
Cool. So next up, we have Mark Bakacs, who is founder of VentureOne and co-founder of the decentralized trading platform OmegaOne. Do you have a favorite token sale you want to mention?
I guess it's a bit of a leading question. OmegaOne is actually going through a token generation event right now. So definitely Omega, I think, is one to watch.
Sounds good.
I also, as a VC, I think it's really interesting to look at the token mechanics and how they interface with more traditional finance. And there's a company that is looking to do a token launch, which is actually convertible debt that converts either into the token or into equity of the company if the token sale doesn't go ahead. So I think there are some innovative models that are.
All right, so next up we have Kavita Gupta, who's the managing partner at ConsenSys Ventures. Do you have a favorite blockchain-based asset or cryptocurrency you want to mention?
I think now we are all plugging our amazing companies out here, so I think I have to use this platform to plug ConsenSys companies. So Grid Plus is about to go on tokens and then for their token launch, so I think that's going to be very interesting to watch. It's also on the renewable solar energy space, which is very close to my heart. And I think because I'm sitting next to Gil, which is also one of our portfolio company prize, I'm going to be super excited about that.
Yeah, so as she said, the guy next to me right here is Gil, the legendary angel investor. Wow, so many projects you've been involved with, including Filecoin, including Civic. You're right now an advisor for Prize. Do you have a favorite token sale that you want to mention?
Oh, Kavita actually, I guess, took my thunder, so I'll have to pick another one. I think the BCAP, the first sort of security token, was one of the more interesting ones, to sort of Olaf's point of people doing interesting things. And that was sort of the first tokenized venture fund. So another very interesting model.
Yeah, there's a lot of cool ones out there. So once again, my name is Leigh Cuen. I'm the tech reporter at the International Business Times. And let's start with the million-dollar question, guys. When we think about due diligence for blockchain projects, what are the main priorities that you think about? We're talking about white papers, we're talking about teams, we're talking about the project's market position. When you think about these questions for yourself, what are your priorities?
I think for me, it's just some interesting and new technological features. I really think that if you're not creating a kind of new suite of tools for developers that can that allows them to build something really interesting on top of what you're building, or if you're not providing sort of differentiated value through to users through similar technology, I think that for me is what is absolutely crucial and what makes projects very, very interesting.
I guess I would say the portion of the project that's decentralized, increasingly you're seeing things that are partially tokenized and partially cloud-based, and so we tend to look a lot at, does this need to be decentralized? How does it benefit from being on the blockchain versus is it a token attached to something?
I think coming from years of traditional private equity and combining it with blockchain, for me, one of the biggest thing apart from developer tool is the adaptation and adoption by the bigger community for this space and for this technology. So whether it's a very innovative method on the infrastructure layer or some sort of a protocol on the top of protocol layer, or it's an application from fintech to health technologies to consumer marketing tools, Any interesting way which is filling the gap of efficiency and redundancy in the current system, and then also helping a better transparent ecosystem for the adoption is something which I'm very deep focused on.
Do you have any last thoughts you want to add about due diligence and how we should think about that when it comes to blockchain projects, Mark?
Yeah, I mean, I think what everyone said is accurate and fair. You know, due diligence for blockchain companies in some ways no different to due diligence for other companies that are not blockchain companies. You still need, you know, a great team. You need the ability to execute. You need a strategy. You need a market to disrupt. You need, you know, all of these things haven't changed. And then I think the extra layer that blockchain adds is, does the token make sense? How is it connected to the business model? If it's not connected to the business model, what's the point of it? What's the value of it?
Gil, I know that you have some pretty strong opinions about red flags. What are the red flags you look for in a blockchain project that make you say, this one is not for me?
Well, my favorite example recently was the sand coin in Russia that you invest in so they can go mine sand in a quarry. So again, sort of back to the earlier point, you know, is the token actually creating software of value, or is it just simply a mechanism for fundraising?
Gotcha. Does anyone else on the panel have something they want to add for a red flag?
I think just adding to Gil's point, most of the projects we coming across right now is coming from a very token launch bubble world, where it's all about figuring out a way to create a utility token, irrespective whether that's actually what consumer gonna end up having or not having, even if the company is really good. So a lot of time when we talk to the companies and we really like everything else ticks off and we're like, it's great, but I think traditional route is a better route for you because this utility doesn't really make sense. So I think it's an extra additional diligence and a red flag on top of every sort of technical diligence and business diligence we are doing.
And I think, you know, if you can't understand the business or you can't understand the token, that should be a red flag. I don't know that it always is a red flag for people when they're looking at these things. You know, if you understand an industry and if you understand the economics of an industry, you should be able to look at it and say, this is going to work, this makes sense. And so many of them don't, unfortunately, make sense.
Yeah, I think that's a really good point to bring up. I know that you in particular have experience as both an investor and an entrepreneur, and I'm curious to hear about what your thoughts are concerning liquidity versus holding. When you think about the different motivations, you know, for the investor versus the entrepreneur, and even an investor in terms of the regular average Joe who wants to buy into the token sale, how do you think about striking that balance for liquidity with a token?
Well, I think, you know, if you are generating the token, you need to think about liquidity in terms of incentives, because you want, you know, if you're giving immediate liquidity to people, especially to employees or to your co-founders or whatnot, you know, you sort of want to think about how you're aligning their incentives, you know, their incentives, with the token purchases, how you're aligning incentives around actually building the business. If you provide a lot of liquidity with the token launches that we're seeing, obviously very large, you know, it can actually provide a disincentive to people to build the business, which can be a problem.
Does anyone else here on the panel want to add some thoughts about what we should think about when we consider the liquidity of a project? All right, so then let's move.
I think he has some thoughts.
Yeah?
Well, yeah, I just think there's an interesting dynamic right now with centralized exchanges where if you want to participate in a token sale, part of the dynamic is, you know, is there going to be liquidity afterwards on exchange? And because there are so many token sales right now, actually a lot of the time the answer might be no. But I'm thinking a lot about decentralized exchanges and how they allow trading, you know, basically, you know, 1 minute after the token is actually distributed on the blockchain, and it's very permissionless, and so you have some level of liquidity pool there. So I think those decentralized exchanges will actually facilitate more tokens launching without relying on those centralized exchanges deciding to list the token.
Yeah.
But I think I want to add to that. I think the onus is on the investment projects, like investment people around on this panel, because if exchange is the only bottleneck for liquidity right now with the token launches. We just need to have better exchanges, invest in more and more, both regional exchanges and global exchanges, and create an ecosystem. So from ConsenSys Ventures, we are investing into both regional and the central exchanges, and looking at some of the mixed method towards centralized and decentralized exchanges. If we can't have a pure decentralized exchange right now, is one of a very big investment thesis for us.
I think going off of that, I have a question for the entire panel, and I want to start off with Gil. How do you think about diversifying your portfolio? How do you arrange your priorities? How do you hedge your bets? What are the things that go into these decisions for you?
Fund managers are compensated by diversifying and trying to sort of make their portfolio safe for their investors. I have the, I guess, the luxury of not having any LPs, so I tend to be highly centralized. I would say right now the bulk of my portfolio is actually in only 2 projects. One is Ethereum, and the other is the Prize project that I've been working on with the team, and that's probably 80%.
Interesting.
I think this is such a new investment opportunities and the new way of creating your asset classes within the portfolio, that we are still figuring out if the traditional asset allocation works, or how do you actually look at your risk, liquidity, investment thesis on top of it. So we invest both in equity and tokens, so it's sort of like a VC hedge fund. So we have the option to have both short-term positions, long-term positions on the token side, and also with the new token system having that exit opportunity for the equity position also. So I think our hedging bets are more with respect to what are the companies we want to be part of in the long term, and what are the companies do we want to see play it along the year with respect to the growth stage of the company. And that pretty much defines how do we maintain the liquidity in the portfolio. But definitely I have to say that we are still, at least for us, still playing and understanding how the liquidity from the token launches is going to impact the overall portfolio hedge.
What do you think?
Well, I think I share Gil's perspective. VentureOne is structured in a similar way where we don't charge fees and such. And our strategy around portfolio allocation is to build the ecosystem. So we invest heavily in few companies, and we work with them very closely to make sure that everything is done correctly, which is, I think, really important in the space.
Yeah, I think despite this being a new area technologically, I don't think portfolio theory has really changed in a meaningful way. So using simple tools like the Kelly criterion to determine position sizing, I think, is still best practices.
With that in mind, how do you evaluate different kinds of blockchain-based assets, right? This is not only a world of strict or similar cryptocurrencies, there are all different kinds of blockchain-based assets and all different kinds of cryptocurrencies. What are, in your mind, the main categories, and how do you evaluate them differently? Starting with Gil.
I probably look at 3 buckets: the core protocols, the things like Bitcoin and Ethereum and others that people can build on top of, the app-type protocol projects, and then increasingly there are these asset-backed projects, and SAN being a bad example, and BCAP, for example, being a pretty good one. And I, for whatever reason, don't spend a lot of time on the asset-backed ones. I think that it is going to happen. There will be a lot of very interesting assets moving onto the blockchain, but I'm not a good financial market evaluator as much as I'm a technical evaluator. So I tend to focus more on the more software-focused projects, which are mainly apps at this point.
Okay, that makes sense.
I think sitting in ConsenSys ecosystem provides us a lot of individual expertise, from technology to ecosystem, or a long view and a short view of how this particular technology ecosystem, like the whole space, is going to move. But apart from that, when it comes to doing the financial valuation, I think we take what has been a traditional outlook and add the new components on it and try to see the correlations and the permutations of moving it, whether it's a sector which is going to define it, whether it's a protocol infrastructure technology which is going to define the financial valuation, or is it going to be a complete game of market, token launch, bubble sector which is going to define this particular company. So I think so far in my experience, every company's financial review or analysis has been very individual. It hasn't been in a standard method where I would go and say, oh, it's a energy space company, has an infrastructure collateral, and we can just do it like that. It has been very individualistic.
I think Kavita is right. Each company in this space is so unique because apart from the usual business metrics that you're looking at, you're also looking at, okay, is it a security token? Is it a utility token? How does the utility token interact with the business model, if it does, et cetera? And we're seeing this very polarized world of, because of the legal infrastructure that we have, utility tokens on one hand, security tokens on the other, and then businesses trying to work around this to come up with something that they can market and also build their business around. And then you have the liquidity issue, which is, if you're holding equity, that equity can become a security token perhaps, but perhaps not. So it's really very case by case.
Yeah, I personally don't really see any value in security, this idea of a security that's a token, because at the end of the day, you can't legally really replace transfer of ownership with the cryptographic token transfer. Like you still need that paper security to transfer to, so it's kind of just a weird interface. It's not really, like the token itself isn't really the security in that sense. So I care a lot more about tokens that actually have to interact with a peer-to-peer network and where there is no business entity trying to kind of extract revenues from that network, but rather that token is useful within that peer-to-peer network. Also, Gil, to your point, something I thought of while you were talking about this idea of tokens being backed by something, I think that we're increasingly going to move to a world where collateral underneath tokens is not held in the real world, but in smart contracts. So the DAI stablecoin, I think, is the main project that's really pioneering this, where you can actually lock up Ether or Ethereum-compatible tokens in a smart contract in order to generate back a kind of asset-backed stablecoin on top. And I think that concept of smart contract backed coins is going to grow and grow and grow as the smart contract tooling becomes more robust.
So Mark, you touched on something that I think we should really tease out here. I know that you used to be an attorney. What are the main topics that you think are going to influence cryptocurrency investing over the next 2 years? What should we be watching out for? Regulation. What kind of regulation?
Well, that's the big question. You hear things, mutterings out of the SEC. Occasionally there's been a statement. It's a very complex regulatory environment for anyone issuing a token especially, for blockchain companies in general, but especially for token issuers. It's multi-jurisdictional. Many blockchain companies are situated offshore. They have complex international legal structures trying to work with or around certain regulations.
Yeah.
There is a camp of people who think that a safe bet is to sort of self-nominate your token as a security, the sort of SAFT model, and that provides a kind of a safe harbor for things. The alternative to that is to make sure that your token can never be considered a security.
Yeah.
And make sure that it is a utility token and make a lot of disclaimers about it not being an investment and whatnot. So I don't know how this will be regulated. I think it's going to be a big mess for some time because it's multi-jurisdictional and governments aren't very good at figuring this out together. It does make it hard for token issuers, does make it hard for blockchain companies. But hopefully the upshoot of it is some kind of, and it may become self-regulating, to be honest. Some kind of a framework that people can buy into and say, well, this is what we're dealing with, this is how we should look at it, this is how the stakeholders can be protected.
Yeah, I think that's all really important things for us to be thinking about. Olaf and Kavita, you also mentioned things that I think are really important to tease out these aspects of community engagement. When you think about a blockchain-based project, how do you evaluate the role of the community and also the project's role in the overall ecosystem? What are the questions you ask yourself?
I think the whole ethos of ConsenSys has always been having that adaptation in the community and creating this Ethereum platform, which is like worldwide community, like looking at it like that. And I think we have taken the similar ethos for the venture side also. And when we look at the project, we are like, as I mentioned before, how is it solving a problem which exists today? And if it would be my friends or my parents or somebody in the ecosystem, how easy it is for them to use it and what are the benefits it's going to give back to the community, both with respect to even in the regional system, US and Africa and like everything internationally. And I think those, when you start thinking from that direction and bring that thinking into doing your diligence of the company, it really helps you to see that apart from one particular solution, which could be, it's an amazing innovative solution, 100 people are going to adopt it, but that's where it's going to end. Or it's going to be something which can really take out the real world problem and actually contribute to what Ethereum stands is very important for us.
Yeah, for me, it's when something can plug into what I might call like the Web3 technology stack. And what I mean by that is, suppose you took a centralized kind of Web 2.0 company like, say, Uber, and instead of trying to compete as a company, you build Uber the protocol. And you remove Uber, that centralized rent extracting entity, and you build a fully peer-to-peer network. What is the stack of technologies that you would need to use in order to build Uber the protocol? And suddenly you run into all sorts of very simple problems. Like if you're building Twitter the protocol to compete with Twitter the company, where do you store the tweets? It's like these very simple problems. And that kind of server-client architecture needs to be completely rethought in a decentralized peer-to-peer environment. So then you need a system like IPFS with Filecoin on top of that in order to ensure data redundancy and high uptime, high bandwidth requirements for the end user. So until you have a robust IPFS system, for example, up and running, it's very hard to imagine Twitter the protocol working, right? So to me, it's the order of operations here. And also thinking about, what are the core components of that Web3 technology stack that will enable a whole series of dApps to be built on top.
Does anybody else here, Mark, Gil, have something you want to add when it just comes to the way you think about a community in this space?
So I was early at eBay, and I think often community gets misspoken as this idea that everyone wants to help for reasons that no one understands. And I think, at least within the developer community you see here, people are helping for very selfish reasons. They're helping because they're miners, they're helping because they own the coin, they're helping because they're building something on top of it. And so I tend to be much more sort of structured in my thinking about community in terms of like, what are the incentive systems and why are people participating and how does it benefit various parties, rather than sort of lumping it in as this sort of community camp that we're all going to this summer where we can sort of hang out. And so I think it's important when you're developing a community to think about it in those incentive terms of sort of what is in it for my community so that they have an incentive to help me be successful.
Yeah, that's really...
I think that's really key to think about incentives and what motivates people. I said yesterday, for those of you at the dinner, at VentureOne, one of our early investors said to me, our job is to infuse love into the blockchain. And I said, well, I'm not sure I know how to do that. But I think the message was taken, and then when I come to events like this, and I see a community forming around a movement, then I can begin to understand how we can infuse an energy of something into a technology, and how those two things can work together. And I think that, yes, incentives are important, but incentives aren't simply monetary. And they're not simply, I want this or I want that. An incentive can be that you want a whole community to benefit from what you're doing, and I think that's really the beauty of this.
Yeah, I think I want to kind of boil down all the wisdom you guys are saying into some key things that you look at when you're opening up a white paper. When you think about whether you want to invest in a project, and you open up this white paper, what is it that you really want to see? I mean, all different kinds of white papers, all different kinds of projects, but is there anything underlying that you always want to see in a white paper, starting with Olaf and going down?
Yeah, I think one thing for me, and this has just historically been, this is not a super crisp answer, but when I see a project and I read the white paper and I can't stop thinking about it. It's that simple for me. Like when it feels like, okay, there's a real breakthrough here, and I just can't stop thinking about like, okay, taking to the logical conclusion, this is going to have massive implications. It's basically when it becomes like a little Pac-Man running around my brain. That is like an early indicator that this is an interesting technology or interesting project. But obviously there's a lot more after that feeling, but I think that's the first and very important piece for me.
How about you, Mark? What do you think?
I think it's that aha moment that the first time I read the Satoshi's white paper, and then the Ethereum white paper, these real visionary, especially at the protocol level, white papers. And then if you're looking at application, it just doesn't make sense. I just keep coming back to does it make sense. I just don't think different rules apply here. I think if you have the aha moment at every paragraph and you say, oh, that's how the community would adopt it. Okay, this is how the economics should work, and you sort of agree with it all the way through, and then you do your research. That's how I evaluate it.
Yeah, I agree with Mark on this. I think recently if there is something which is stuck in my head, and even though they're solving a problem which I've already read 5 times in different white papers, but there is something different, and I want to keep on coming back to it after 2 days or 3 days, and want to keep on talking about this to figure out if I am missing something, or this is actually a very different way to solve this problem, then I know that I have to talk to the entrepreneurs, and there has to be a next step.
Okay.
Yeah, I guess following up on Mark's point, right, as you're going through the white paper, you're looking for a reason to say no, right? And so you're going through and going, oh, that won't work, or that won't work, or that doesn't tie together. But when you do get through all the series of steps and you can't find a reason to say no, that's when your brain starts really sort of churning on, well, they must be doing something right here, and where do we go from there?
Yeah.
All right, so what I'm catching from you guys is if people are looking to invest in a project, what they should really be asking themselves is, does this feel to me like a catchy song or like a book I can't put down? Do I keep coming back to it?
Yeah.
I really want to leave some time for questions with the audience. Does anybody want to ask questions of our panelists, or should I keep bothering them? Because I have lots of questions for them. By show of hands? Yeah, go for it.
Question for Olaf regarding your conversation about looking for the networks and protocols that are going to build, like they will take out these versions. You can't expect the Ethereum VM to be that, or we're going to be needing other pieces for that.
Can you?
Yeah, no,
did you hear his
I'll
question?
repeat it.
Yeah, okay.
Basically, what other technologies outside of Ethereum will we need to see? I think that was sort of the question. I mean, I think there's a lot. You see these kind of other protocols being built on top of Ethereum that I would say act as like infrastructure or like middleware that aren't meant to be as much an extensible programming language like Solidity, say, or Serpent, but rather, application specific, yet still open for a whole ecosystem of things to be built on top. So 2 examples here that I talked about earlier would be the 0x decentralized exchange protocol, as well as Filecoin. So both of those systems are meant for a really pretty specific use, but they both, any sort of application built on top can call those systems in order to execute a very specific function. So I do think there's a stack here, and that Ethereum and other kind of smart contract platforms are maybe the base of that stack. But I think that many things need to get built on top before we're going to have successful end users using these types of things in a real scalable way. I think stuff like the Ethereum name system as well would fall into this category of being really important infrastructure middleware that's necessary beyond just that base protocol.
Anybody else have any questions they have for their panelists? Go ahead.
You guys all mentioned regulation as a big potential issue. One way to get around that is by staying anonymous. That's what Satoshi did, right? And you might say, oh, well, no one will trust that. That's handling $100 billion, and now the code kind of speaks for itself. When do you think we're going to start seeing some really big, interesting, anonymous stuff happening?
Do we want very big, real, interesting, anonymous stuff happening? I don't know. I think my perspective is if you want to take an experimental project and you want to take it to every household across the world, regulations are not always negative, Governments getting involved, institutional capital getting involved is actually going to give, basically open up the circle to a really big manner. And at least sitting where we are, I want government to come quickly and let me know how can I do my security tokens, because there are a lot of products for which security tokens makes a lot of sense, and we want to able to do it with a very big capital pool and a market cap. So that's at least my personal thinking.
Yeah, I'd agree with that. I mean, it's hard to be anonymous and have a large impact. It does happen, but I think you have to assume most of the time that even Bitcoin does have a group of developers who can be influenced by regulators. And I think tokens, the prize token I'm involved in actually works on trying to reduce the impact of regulation and try to remove some of the burden of it. The joke I hear a lot is, when are the regulators coming? When are the regulators coming? And I'm not a lawyer, but 20 years of being involved in the tech industry here, what I can tell you is the regulators always come when it's worth something. So it's nice to hear the regulators are coming because it means what we're doing is worth something.
I completely agree with that. I think it's a sign of the maturation of the space. And a lot of, I think, the work that we have to do is to build a bridge between the crypto community and other industries. I can remember when we started working on Omega, and I was talking to Joe about involving Wall Street. John Mack is from Morgan Stanley is an investor in our vehicle. And it was a real conversation we had about, should we take this and go and talk to Wall Street about it? And the answer was yes, let's work with them.
Mm-hmm. Yeah. I think another thing that's very interesting to me is that developers that are actually working on these projects, their tether to the non-blockchain world is often their financial relationship with a nonprofit foundation or holding company like the Ethereum Foundation, say, that's either paying their salary or giving them tokens or something like that. What I could see happening in the future is that these coin offerings and token distributions, instead of that money going into a bank account controlled by, say, a nonprofit foundation in Switzerland or a holding company in the Caymans, instead this going directly into a DAO that basically governs the development of the protocol. So something I've been thinking about a lot is that I think a killer app for DAOs might be building blockchain protocols, and then the kind of relationship that any given developer has financially with that protocol is through the DAO, and their payments are coming from the DAO, instead of that being a kind of legal entity tied to a bank account and things like that. Now that DAO, though, has to have a series of kind of service providers built around it so that you can pay the lights in an office or something like that. And so it does add new complexities, but I do think that there is a potential future where many of these projects, when they receive financing, that money, instead of going into a legal entity, goes into a smart contract system that actually governs the development of the protocol.
I think we have time for one last question. Did you want to okay, we're good. Yeah, go for it.
What is your top frustration making investments in the blockchain space today?
It's a good question.
Yeah, it's a really good question.
I'd say it's the same frustration I've had as an angel investor, which is there's always too many ideas and not enough me. I mean, there's a lot going on, and it's a lot to process, and we're all flooded, and so I really appreciate the people who are patient and somewhat understanding with the fact that I don't always get back to people in 12 seconds.
I think for me is every time when a company comes and do their valuation based on the bubble valuation of their token launch, and they do so strongly believe in a 200 or a $500 million valuation of something, which I wouldn't give more than $5 to $10 million. And then the conversation is all about the valuation, not about the product, not about the idea, not about the change. And that part day in and day out keeps me off.
Biggest frustration. It's no one's fault. Companies are hard to build. The biggest frustration is that no company comes to a VC firm fully formed and able to carry out its mission, often without some help. And so every time we look at a company, we think, okay, can we really help them? Can we take this on and help to make this really successful? And I think, especially in the blockchain space, where there's a lot of froth, and sometimes a disconnect with real industry for now because it's so early. That's even more important.
Yeah, for me, I know you guys both mentioned investing in companies. I think this is one of my frustrations, is a misunderstanding of the relationship between like some sort of for-profit company and a peer-to-peer protocol they're developing. The ability to extract values in the way that Web 2.0 companies extract value from the networks they own doesn't really exist here, right? Because anyone in the world can, this is an open source protocol, they can make a copy of that protocol, remove that rent extraction mechanism, and basically cut out any sort of, quote, business model that this company had. So I think that there's often a confusion and porting of the old way of thinking, both on the investor side, from venture investors, as well on the entrepreneurial or developer side, thinking about how to actually be made wealthy from this. And it's looking to an old model when you really need to rethink how there is no revenue, right? Or I don't think there should be. If there's revenue, in my opinion, you probably need to completely rethink what you're doing. If you're doing a token, so anyway.
All right,
Good.
thank you so much. Oh yeah, do you want
No,
to? No, you're all good? All right, last call. So that's about all the time we have today. Thank you so much to our amazing panelists. I feel very enlightened. And I hope everybody here has a great day at the rest of the conference.